Hey folks, wanted to do a review of an interesting day that we had. It's been a little bit since the last upload. Gosh, we've had FOMC, we've had FOMC minutes, we've had some pretty important inflation data coming up, or coming out rather, and gosh, big earnings with NVIDIA, big tech earnings, quite a full past couple of months. This day here stuck out to me as a good day to cover. So I kind of quit doing the market internal reviews near as much because, quite honestly, they're all mostly the same. You guys have heard everything for the most part that I have to offer. I do realize that perhaps some of you are studying the charts at the end of the day, and maybe you like to hear what I think and what I saw for that day. So if that is the case, and you guys really do want me to try to keep those consistent videos coming out, feel free to leave a comment. But unless I get a strong sentiment to that effect, probably do them sparsely from here on out, so I can focus on content for other things. But let's jump right in here on the SPY 2-minute chart. So all the same indicators that I think I've covered quite well. We've got our TWAP ranges, TWAP itself. We've got the top holdings of SPX and NDX, which maybe I should check these. It's been some time, but these are all of the stocks here in case you want to look at those. And of course, we have MIT down here. And I have one other one that I have been working on privately. I'm not sure if I will release it publicly or not, but I will be showing it because it helps me draw in some data that all on one chart, as you know, I'm a fan of if you've watched any of my other videos. So one thing I'm going to do real quick is zoom out to the past handful of days prior to May 23rd. If you've watched the content, you'll know I like to stay long above previous TWAP range, and I like to stay short below. If you've been trading for some time, it should be obvious by now that gap ups are something to be somewhat reserved and reacting to. As far as having any kind of long bias, we need to wait and see if that gap will be tested or not. Or inversely, if there's a gap down, same thing. We also, if you've watched this channel and you're a longtime viewer, you'll know that we don't trust the beginning market internal data right at the beginning. If the advancement and the volume, well, mainly the advancement, will have some morning skew with the gap. All the New York stocks will be gapped up. So, of course, the advancement's going to look really strong. We need to wait and see. Is it going to hold that 1,500? Is it going to hold that 2,000? Plus or minus. If it's not, right, we don't want to be caught off sides. We don't want to chase it, even though, yes, the volatility, the volume, the momentum is all mostly the strongest during the open and close. It doesn't matter if you're on the wrong side. One thing that I like to do is be calculated, and we risk on when we know the probability is in our favor. And until the structure is set up for the day, I would posit that it's not going to be clear enough to have a strong probability figured out, directionally speaking. So May 23rd. Looking at this, we've got our top stocks here showing green, meaning the majority are in advancement. Notice the line here, by the way, is for the SPX, and the histogram display, column display, is for the NDX or NASDAQ. So that's mainly tech. Big tech is the one pushing. S&P, not so much. We come down, we're looking at New York. We're starting with a bull trend on price and volume, but notice the bands are bearish, so their values. And of course, we have a gap up on SPY this day. So here's what I want to display. So we're above previous TWAP range. Why wouldn't you long, once we retest this? Okay. So a couple things. We're real tight on previous TWAP range for multiple days in a row. That, if you've ever used something like Bollinger Bands or I think VWAP can even do this. It's showing that there's a constriction in price. So we also had multiple sleeper days where we had almost no 500 tick breaks. You can see we had just a tiny bit there, maybe a couple blips here and there, but just honestly, for recent times anyways, very low tick interaction with the market. So volatility's kind of slumped off. Even more reason to be careful. You don't want to be caught off sides if the market decides to make a snap judgment call and you're on the wrong side. It's going to hurt. Slippage, depending on what you're trading, could even make your losses worse than what you figured. Especially options 0 days with gamma. That's not a great time. So I'm going to add in the other indicator here. So just to give a quick rundown on what this is looking at the New York market, much like MIT does, but it shows you the bands for price and volume. You can see the labels, they're kind of buried. This is in look back mode, but price and volume. So price is this band, volume is this band, just kind of like MIT where the price is at the top and the volume's at the bottom here. So the reason I love this display here is it, for historical review, if nothing else, is it gives me the running tally of the advancement or decline and the ratio for volume as the day transpires or as I look back through time here. So note, we open the day on a gap up. We're above previous TWAP range. We've got bullish NASDAQ, I would say barely bullish S&P. So, and we're also above previous day high. So time to go long, right? Well, no. We're only at 500 advancement. That's barely anything. So SPY is the S&P market is largely in alignment with the New York Stock Exchange, and volume for the most part is 1-to-1. So there's really nothing to do per the internals. You want momentum, you want strength, you want trend, and you don't have any of those. So unless, at least right now, when the volatility is as low as it's been, we need that extra punch from the rest of the market. So that's the market breadth. Or at the very least, I would argue you need the top liquidity in the market. That's your top dogs, right? The Magnificent Seven and a handful of the other ones. You need either that group or the entire breadth of the market to be pushing hard. So that means 1,500 plus advancement, maybe 1,000. You could get away with that. Or and the volume. You want more than 2-to-1 most times. I would say 3-to-1 for sure. So case in point, right? We're above previous TWAP range, but we're below current TWAP. I'm going to turn TWAP white so it sticks out a little better. It's become my preference here as of late. Okay, so yeah, we're below TWAP, right? So that's, if anything, what that's saying is wait for a better setup. I would personally wait for a breakout of TWAP first standard deviation on the high end here if I was going to go long in favor of my filter rule for previous TWAP. But notice we're still negative. So MIT is showing you that with the colors. And intraday, you would have the data table here. This just doesn't show the numbers like this indicator does. And so even again, we're getting these pops, and still same thing. If anything, the volume has actually declined even harder. So we started at I'm going to skip the skewed number here. Okay, never mind. This is this day. So we started at 1-to-1 and pretty much fell to -2-to-1. That's already a pretty strong signal. Almost -3-to-1. Definitely -3-to-1 here. -4-to-1 here, right as SPY is testing previous TWAP. So not much of a shock here, right? This is a heavy amount of volume pushing, and we're at -1500, actually more than that, on the advancement of New York market when we push right here at a level that we, on this channel anyways, know there's a high probability of a reaction. Well, what happens? Boom. We have a reaction. Okay? This is why I believe in previous TWAP. We get reactions like this all the time, sometimes down to the very cent. It's not a guarantee, nothing is, but quite often that's what happens. So what happens, right? We come back up. What do we test? Previous high of day, previous high price. Look at all these wicks on here. If you know even a smidge about price action, you'll know what this is. Equal highs. Equal highs on the 2-minute. That's a lot of supply. Okay. Look at our ratios. We're still heavily bearish. Why would you try to long any kind of breakout here? It's not happening. Okay. Sure, you have just a teeny bit of bullishness from NASDAQ, right? The histogram is NASDAQ. That's nothing. That's nothing at all. We want this or better, and we want it both for both S&P and the NASDAQ breadth, the top holdings. That's what we want. We don't have it. Okay, and just basic price action, right? We started up here. We're down here now. We're not making any advancement. That's a lower high. Meanwhile, we have support for a bear case here at the ratios for the New York market. Okay, yes, we're above TWAP. Maybe you could have scalped that a little bit, but why struggle for pennies when we know there's a bigger story at play? All right. The nice thing is, compared to, say, this dump here, compared to the rest of the week, we actually opened up with some stronger tick. Now notice, most of that strong tick is on the bear side, very little on the bull side, but it's not one-sided. We are seeing this test here. We're seeing a little bit of bull tick, so that's nice. Okay. We also have one of my favorite things to look for is a tick divergence. These hit pretty well. So we made a higher high on SPY between this point and this point, but no breakout on tick. The exact same tick. Now we get into the interesting part. So now we start to see more of a downtrend here as we break below TWAP. We're starting to see heavy tick here. And again, we lightened up on the volume, the bear volume in the New York market. We're starting to pick back up or pushed back down. So we're back down to -3-to-1, almost -4-to-1, right? And look, right where this occurs, where this real strong sentiment of breadth is aligning to, is SPY breaking down the previous TWAP range. So now, as soon as we flip below previous TWAP, we are now, per the filtering rule that I use anyways, we are now at a point where it is a short bias. So everything above this white line, previous TWAP, is long bias. Everything below, bear bias, short bias. Look for shorts. Above, look for longs. Need this data to confirm. It also just so happens that right as we're getting the break and retest of the negative first deviation level on session TWAP, That is right where we're hitting the previous TWAP. We got a little tiny bull tick. This is a nice little breather in a sea of bear tick. That's an entry for a short. MIT is showing you the trends are in full alignment for the short case, and so are the ratios per the bands. We have this other indicator to show us the raw data. So almost negative 4 to 1, negative 1600. So recall what I said earlier, negative 1500 or positive 1500. We need that momentum. We need that power. We need that trend. What are the top holdings of both S&P and NASDAQ? Extreme bear. We have flipped from somewhat strong bull and medium bull for strong bear on both indices. Okay. So you get in here, you got your first SD's worth of range from prior day collected in about 8 minutes. 2 SDs in 24 minutes. 3 SDs, if you're waiting for close, in 46 minutes. It's a $3.76 move, $3.76 move, and you can be done. You got all this bear tick. You got these bear tick extreme closures down here. You can take trims on those. You don't have to hold it for all this. I mean, you do what you want, but I'm just showing you on a day where it looks like we've already moved so much. That's how the market gets you, right? So at this point here, SPY has already come down $4. That's almost the exact spot where we enter and collect another 3 standard move. Okay, this is a decent sell day for SPY. That's mainly what I want to cover is just kind of a reminder to remain patient and look for the data to align to whatever it is you're trading. And one of the very first videos that I made on this channel, my advice I gave was, if the internals and whatever it is you're trading do not align, walk away. We have all of this data plotted for us, previous TWAP. Set an alert on it. Set an alert with TradingView. It's so easy. You come over here, add an alert. Done. Now you can go walk away. Maybe SPY stays up here. Who knows? You can even go set an alert on the VOLD chart if you want. Set an alert for whenever VOLD crosses down one of the levels that I've demonstrated on this channel. Same with tick, same with add. Do the same thing. Set an alert for every time add hits negative 1500 or positive 1500. Simple. Then you don't have to sit there and watch, and you can wait for the opportunity to come to you. It can be as simple as that. And you know, a lot of these other little tiny moves, you can do them, but right now with the low volatility, not a great choice in my opinion. Yeah, that was the main thing. I just really wanted to cover that day because it was very interesting to me, and I thought it was a great example of patience and how opportunities will always present themselves that align to everything I've demonstrated on this channel. You just have to be patient. So we will look at the market breadth layout I have here. I've shared this a handful of times. So I think one of the last times I had a recording was perhaps back around April timeframe, and so we had a decently lengthy pullback. I believe this pullback was about a week or so, 15 days, so a couple weeks, and we definitely tested the efficiency of the 5 SMA breadth on the top holdings of all the major indices. So we hit a low point here, and we still continue to come off, even though we had the 5 SMA line crawling back up. So very interesting to see a divergence there. I've not actually seen that before yet. For this whole time we had over here, every pullback on the 5 SMA was a pretty dang good bottom signal to buy back in. Not the case here. You would have been hurting a little bit here. I mean, you buy 30 days time, or you're buying shares and you're still holding, eventually you'll be fine. But I mean, that's in hindsight, obviously. This case, though, we did get a nice little sharp 5 SMA pullback like we were earlier this year, and we just had another one. So what will it look like? Will it look more like another kind of downtrending channel retest like we had here, or is it going to be more like what we had here and we're off to the races and we're going to go higher? So lots of FUD about inflation, and obviously this is the election year, so that's certainly something to keep an eye on. But let's look at next week for data news. We have Fed speakers coming out again. We had some this week. Not a lot of high impact. These Fed speeches can be high impact. I honestly kind of wish that TradingView would just give them 3 bars or high importance. I know they're not Jerome Powell, but I can't tell you how many times I've had some trades get screwed by these guys making one-off comments, and the books pull some kind of fast and loose stop hunt. Bostic is the one that seems to be the most famous for that. I think Williams as well. Nice thing is Bostic is after hours. And let's see, I think Friday. I swore Friday. Yeah, so Friday we have personal income, core PCE. So next week could be kind of slow, given that we also have Memorial Day. Monday is it's a day off for the markets. So usually short weeks are pretty pretty shite for trading. We're at periods of low volatility, and then perhaps with core PCE on the horizon, we're not going to see a lot of high volume kind of events spread out throughout each day until that's done. So, and then that takes us into June, and the following week we have a handful of medium events. We do have a PMI, unemployment rates, and NFP on June 7th. So that's not next week, it's week after. So earnings, don't think we have any big earnings next week. AI, that could be interesting, but that's certainly not big. Dell, they've been making good moves, but not one that's going to impact the whole market like an NVIDIA would do. Okay, so yeah, nothing else that I can really see. That's the main thing I wanted to cover was that previous day. And yeah, just kind of say hi to everybody and go over the market breadth. I hope you've been having a great last couple of months trading, and I've been seeing the comments on the TradingView account under all the indicators. Somebody gave me 100 TradingView coins. Always appreciate that. Definitely helps out. And yeah, as always, happy trading, and thanks for watching.